Welcome to Yahoo Finance's flagship show, Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures under pressure as Palantir drops amid concerns over its lofty valuation. The decline also sparking worry over the sustainability of the AI trade more broadly. Adding to the concerns, hedge fund manager Michael Burry of the Big Short fame disclosing bearish bets on Palantir and Nvidia. Still, Palantir did top analyst estimates for third quarter sales. The company also raised its annual revenue outlook. The stock has soared more than 170% this year through Monday when it closed at a record. And we got a slew of companies, it's not just Palantir, coming out with earnings. Uber shares, for example, under pressure after the company posted a miss on third quarter operating income. The ride-sharing giant also issued an adjusted earnings forecast that fell short of analyst estimates. Meanwhile, Pfizer raised its 2025 profit forecast for the second time this year. Pfizer's still trying to rebuild in the aftermath of the pandemic. The company's kicked off a $7 billion cost-cutting program. It's planning deals to drive future sales growth, but one of those might be in jeopardy. Novo Nordisk throwing a wrench in its plans to buy obesity startup Metsera with a counterbid, and now Pfizer has filed 2 lawsuits challenging the Danish company's offer. And the government shutdown stretches on. It is now on track to be the longest government shutdown ever. Senators will vote on a short-term funding bill for a 14th time today, but there haven't been any bipartisan breakthroughs. Now, while much of the political attention today will be on elections in Virginia, New Jersey, and New York, the shutdown's effects are beginning to affect Americans. More than 40 million low-income Americans were poised to lose access to SNAP benefits, but following a judge's order, the Trump administration said it would send out partial payments to beneficiaries. Let's get a check-in on stock futures right now. We are seeing this pressure across the board here. It looks like it has something to do directly with Palantir, something to do more generally with concerns over valuations here. But either way you slice it, unsurprisingly, NASDAQ 100 futures are showing the biggest declines. It looks like pointing to a gain of about 1.5% at the open. S&P futures pointing to a drop of more than 1%. And Dow futures looks like down about 0.6%. Let's dig more now into our top stories of the day. Those top takeaways from Palantir's earnings and Wall Street leaders warning of a pullback amid high valuations. Plus, the government shutdown stretches into its 35th day, now tied for the longest in history. Joining me now, tech editor Dan Howley, senior reporter Brooke DePalma, live at the NASDAQ, and our Washington correspondent Ben Wershkul. Dan Howley, we're going to start with you. And on these Palantir numbers, which look pretty good, it seemed like.
Yeah, they beat on the top and bottom line. They beat on the expectations for Q4. They seemingly, as you said, had a great quarter, and yet we could see that in the pre-market, shares are down more than 8%, and it really has to do kind of, as you said, with these sky-high valuations. We have Wall Street analysts basically kind of balking at what the shares are trading at this point. This is a stock that's a favorite among retail investors. It's been shooting through the roof, riding kind of the AI wave that essentially all of the tech industry has been riding. They sell, obviously, their software to businesses as well as the government. It uses AI. They signed a deal with Nvidia to capture more chips to be able to speed up the use of their software. And so at this point, it seems as though it's to do with the valuation more generally. And CEO Alex Karp had this to say about the valuations. He said, the ascent has confounded most financial analysts and the chattering class whose frame of reference did not quite anticipate a company of this size and scale growing at such a ferocious and unrelenting rate. He said, some of our detractors have been left in a kind of deranged and self-destructive befuddlement. And so that's kind of his shot at the Wall Street analysts who say, this stock is trading at levels that just don't kind of make sense when you compare them to what the other or what its larger big tech competitors are trading at, the likes of Microsoft and Google and Nvidia. Their PEs are lower than what Palantir is at. So obviously there's these kind of dueling takes where the company, obviously says, look, we're gonna continue to crush, continue to move forward, and analysts are saying, well, let's just hold our horses for a minute. Maybe this price is a little high for what the company's doing.
I mean, that said, the numbers were pretty impressive. If you look at the year-over-year gains, you read some of his quotes from the call. Dan, I'm going to read you my favorite. He said, by any normal or even reasonable standard, these are not normal results. These are not even strong results. These are arguably the best results that any software company has ever delivered. No exaggeration there, I guess. I don't know, but I mean, to be fair, the sales gains year over year were big.
Sure, the sales gains were huge. He also, for some reason, quotes poets and filmmakers. Really likes to write a lot in his letters, I guess. But yes, this is, I mean, a company that is clearly doing very well. They managed to score these big contracts. Obviously, the U.S. is its largest region as far as revenue goes. They have these contracts, and they've taken heat for working with different government organizations, including ICE. They have a contract with the IRS. They have one with the military. They also, however, work with businesses, and so they work with logistics. This is a company that, as mysterious as it may sound, basically takes data and helps make it more usable. So it'll pull data from disparate sources and help a company understand how to better take advantage of it, or government entity. And so that's really the thrust of what Palantir does. It's, the name is obviously a reference to a Lord of the Rings object that, allows you to see places far away. This isn't a, mystical company by any stretch of the imagination. It's just taking data and lining it up in a way that makes more sense. And so that is helpful for organizations that are massive, such as, commercial offerings, as well as the likes of the U.S. government. And so that's where they really are shining, and they're just doing something that other companies simply aren't doing as well.
Yeah, and the sales numbers and the quoting of poets maybe helps back all of that up. Brooke, all of that said, obviously there are some questions about the valuation side of it, to Dan's point, and it looks like one of the people hinting in that direction is one of the people who made his name during the financial crisis.
Yeah, Michael Burry, the hedge fund manager who called out that 2007 financial crisis and the collapse of the U.S. housing market back in 2007 has now put a sour note on this AI trade, perhaps one of the biggest calls on this bubble risk that we've gotten so far that kind of puts a little realness to what could happen over the next few years. And so what happened overnight was his hedge fund manager, Michael Burry, bought put options on 1 million shares of Nvidia and 5 million shares of Palantir. And just to understand how much exactly that is, 1 million shares would be about a valuation of $187 million. And those 5 million shares of Palantir, well, that equates to about $912 million. And so a pretty significant bet here that Michael Burry is making on both of these companies, as all we've been talking about was the valuation of both of these key players within this AI arms race. And yesterday after market close, he went on to X and he shared a pretty interesting post. He basically pointed out one or a few charts, but one in particular was about the cloud revenue segments for Amazon, Alphabet, and Microsoft. And what he pointed out was that during the years of 2018 to 2022, we saw returns of 36%, 45%, and 22% for these three companies. And over the past few years, the return on both of those, or rather all three of those cloud segment revenue, has been significantly lower. And what he said with this graphic that you're seeing now on the screen was, these are not the charts you're looking for. You can go about your business. And this was after this filing had come out. This was based on a regulatory filing that for the quarter that ended September 30th. And so we're now just getting it. And it's definitely causing a bit of fear among investors this morning.
Yeah, definitely. Even though it's all sort of hints and insinuations. He's not coming out with sort of a long screed on all of this. He just dropped those things that you talked about. Now, we are also at the same time, just coincidentally, getting some commentary from big asset managers who are at a conference in Hong Kong, and they're also talking about valuations.
Yeah, at this financial summit, we heard from Goldman Sachs CEO David Solomon. We also heard from Morgan Stanley CEO Ted Pick. And what they said essentially was that these evaluations are pretty significantly high right now, and we could be seeing a pullback. So specifically, Morgan Stanley CEO Ted Pick saying we should also welcome the possibility that there would be 10 to 15% drawdowns that are not driven by some sort of macro cliff effect, calling that a healthy development. Goldman Sachs CEO David Solomon sort of echoed that. But we've heard from so many many executives that investors should right now sort of brace for a potential market drop of about 10% over the next 12 to 24 months. Of course, we've had the significant run up this past year, the market around record highs, leading to these really significant valuations. And so now hearing a bit of a correction here definitely is setting a new tone on the street. But all these executives really saying that this would be a healthy correction that could happen, a really positive development for the market.
Here's one that is not necessarily a positive development for the market or for anyone affected, and that's the government shutdown. Now looks like it is entering a record, 35th day, Ben? To give us the latest here and whether there's any chance of it ending.
Yeah, so we are, as you mentioned, we are in day 35, which does tie us for the longest shutdown in U.S. history. It's actually since the last one, as you can see on your screen there, 35 days in December of 2018, 35 days now. But there are some signs of talks that are beginning to bear fruit here. Senate Majority Leader John Thune talked to reporters yesterday about a possible off-ramp here for talks for the shutdown, focused on lower level talks among senators that haven't reached the leader level yet, but appear to be bearing fruit. The outline of a deal here apparently is some combination of reopening the government, a vote for a date certain on Obamacare subsidies, which is the heart of the Democratic, the reason the Democrats are focused on this, and then also potentially some appropriations bills that would make at least a future shutdown, which still could be on the table as soon as next month, even if this deal goes through, a partial shutdown as opposed to full shutdown. So it would blunt some of those effects. This is all very tentative, of course. These are very complex issues and very tough politics, I'd add as well, to get this through. But there does seem to be progress towards this as lawmakers really are feeling the bite. You mentioned this at the top of the show. All these economic effects that really are starting to pile up. Last weekend was the worst one yet at airports in terms of flight delays caused by this shutdown. We've also seen food benefits, which 1 in 8 Americans rely on. Partial payments at best for Americans if this shutdown continues. Overall, this is going to take days to play out, so we're very strong expectation here in Washington. We're going to get to day 36, and we're going to break the record for the longest all time. But the focus here is on the end of the week, when the Senate is scheduled to head out for a recess, so that tends to focus lawmakers' mind on whether they can at least do a stopgap to end this shutdown, even if it doesn't take it off the table for end of this year, early next year, depending on a lot of the details that are still to be worked out.
Well, and in a coincidence, I guess, or, we've got this big week for politics because you have that happening. You have a Supreme Court case happening, which we'll get to in a second. And we have an election today also, Ben. Yeah. And what should we be watching in those? Or I shouldn't say we have an election. We have elections because it's a number of state contests.
Yeah, I think what we're going to see, I bring together both this Supreme Court case on tariffs and these elections as I think we're going to see there's going to be a lot of consequences for what Trump's political landscape for his economic agenda over the next year are. On tariffs, this is a Supreme Court case that will decide whether the lion's share of Trump's tariffs are legal. So that has major implications. What we're going to get tomorrow is arguments. So we're going to see the mood of the justices on this, but not a final decision. And on elections, what we're going to see is whether kind of the moderate side of the Democratic Party is ascendant or the more progressive side of it. We have a moderate candidates in Virginia and New Jersey who have had a tougher time, but they're still expected to win, perhaps narrowly in some cases. And obviously in New York, we have Zohran Mamdani. The margins there are going to matter. If the moderates overperform Virginia and Mamdani underperforms, that's really telling about kind of what the shape of the Democrats are for the next year, as well as what the political reality will be for Trump, both on tariffs, but on his larger economic agenda on all these various fronts that we're talking about up for the next year, up until the next midterm elections, which are about exactly 1 year's time.
We're going to keep us busy. Dan, Brock, Ben, thank you guys so much. Yeah. Former Vice President Dick Cheney, a towering force in American defense and energy policy, has died at the age of 84. A veteran of 3 presidential administrations, Cheney reshaped the vice presidency in profound and sometimes controversial ways. He served as vice president from 2001 to 2009, becoming a central architect of America's response to the September 11th attacks. His aggressive posture on national security including the push to invade Iraq, expanded U.S. military engagement, and defined a foreign policy strategy for a generation. Before serving as vice president, Cheney was defense secretary under George H.W. Bush, overseeing the Gulf War. He also, remember, led Halliburton as CEO in the late 90s. Cheney's influence, often described as unprecedented for a vice president, helped tilt power toward the executive branch, with lasting impact on intelligence operations, defense spending, and America's energy posture. Supporters hailed his resolve and strategic discipline. Critics warned his approach broadened presidential authority and deepened U.S. entanglements abroad. Few dispute his role in reshaping America's security doctrine and the economic and geopolitical forces that followed. Cheney died due to complications of pneumonia and cardiovascular disease. He is survived by his wife Lynn and daughters Liz and Mary. He was 84 years old. Now time for some of today's trending tickers. We are watching Tesla, Archer Daniels Midland, and BP. First up is Tesla, the stock under pressure after a major shareholder said it's voting against Tesla's proposed $1 trillion compensation package for CEO Elon Musk. Norway's sovereign wealth fund saying the size of the award is too large and its decision was consistent with its views on executive compensation. Tesla shareholders will vote on the pay plan on November 6th. Tesla's board pushing for approval of the package, with Chair Robin Denholm warning last week that Musk could leave the company if the deal is rejected. Next, we have ADM, the company reporting a 19% decline in operating profit, prompting the agribusiness giant to dial back full-year earnings guidance for the third straight quarter, now cutting it from $4 a share to between $3.25 and $3.50 a share. Archer Daniels Midland and its peers have faced pressure as tariff wars have put crop exports at risk, plus a delay in Washington setting a biofuel blending policy has weighed on ADM's results as well. And finally, BP, the London-based oil and gas giant, posting a better-than-expected quarterly profit in a sign that its turnaround plan is gathering pace. BP saying the results reflect higher production and stronger refining margins, which offset weak oil trading. It expects divestment and other proceeds to come in above $4 billion for 2025. The shares getting a little bit of a lift. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Michael Burry, the hedge fund manager of the Big Short fame, has two new targets, Nvidia and Palantir. Burry, who rose to fame for his 2008 bet against the U.S. housing market, bought put options on the companies. That was revealed in a 13F, and that means he would profit from price declines. The disclosure comes just a few days after he posted cryptic social posts about market exuberance. Joining us now for more on investing in tech is Max Wasserman, Miramar Capital co-founder and senior portfolio manager. Max, it's good to see you. The Burry stuff caught our eye because, you know, he even in his Twitter profile, X profile, he calls himself a Cassandra, right? Warning of things to come. Do you think that this is a warning that investors need to heed?
Well, thank you for having me, and I'm surprised at the reaction. It didn't take much to say anything about valuations being this lofty. So if he throws a little cold water on it, it's probably short term with the momentum trade right now. But yeah, these valuations are ridiculous. I mean, Palantir is up, 170% year to date, trading roughly around 250 times. A great company, great technology, but these tech stocks are valued at growth in perpetuity, that there's never going to be a hiccup. So for somebody to come along and throw a little cold water on it, I'm surprised more people are not doing it. But there's an old adage, you can go broke shorting a momentous market. So I'm not so sure how long this lasts.
Although I guess with puts, you're not putting quite as much as risk as if you're outright shorting a Max. But okay, so for normal investors who are looking at this question, what do they do about it? In other words, like if you hold tech stocks, do you just keep holding them? Is it just a question of not adding at these levels?
It's a great question. You know, we have an investment in a lot of these large cap dividend tech stocks, and they've grown very large. So we are scaling them back a little bit for a variety of reasons. One being the valuations, and we just don't want to be so concentrated in the tech market because people forget back in March and April this year, the NASDAQ was down 20%. So the market could take this momentum and shift to the negative, and people could get really hurt. So we wouldn't be piling into these investments. And depending on your tax situation, we would lighten up a little bit here. We definitely would take a little profit. I mean, again, we're not saying get out of them, but you got to manage the downside risk. The valuations here at 40, 50, 200 times. How much more do you expect to happen? And is it asymmetrical? I think there's more downside than upside in the near term, but the momentum is crazy right now.
Yeah, it does feel that way. And we've been talking to a lot of investors as well about diversification. And that means something a little bit different to everyone. And I think in your case, it means something a little bit different too. I'm curious about your strategy around sort of what you view as stocks that'll benefit as interest rates come down more.
Sure. I mean, we diversify. We have individual dividend growth stocks. So we have the tech, which represents about 25, 27% of our portfolio right now. And then we're diversified in healthcare, consumer staples, energy, cyclicals. So we think as interest rates come down, the companies are going to benefit for that. You know, refinancing could help the housing market. Companies like Home Depot, which we have an investment. McDonald's, we think, as people have become more discriminatory in what they spend. But we like the defensive names. They're still growing, but not trading at these crazy multiples. We like healthcare, right? You're getting paid a nice dividend, 3 to 4% on average for some of these pharmaceuticals. And companies like AbbVie is a big investment for us. Waste Management's another good company. But we have a barbell strategy. We've seen this before. My partner and I have been around a while, from the white hair on my face, and we've seen when momentum changes. And when it changes, it gets ugly quickly. So we're telling people, have a little diversification outside these portfolios, because what's happening now, the investor says, why should I own anything outside of tech? Because everything else is going down. Basically, everybody's selling everything that's non-tech and piling into the AI trade and second derivatives of the AI trade. So they're creating really great risk reward outside of AI, and it's become such a momentum trade in AI. It's very hard to make money at this level.
Max, what are your sort of contenders for a catalyst to end the momentum?
I think somebody wakes up one day, you know, not today, but wake up one day, say, I'm not going to spend 250 times earnings on a company. I don't think 55 times earnings on some of these great companies, good companies, but the rate of growth is being valued at perpetuity. So any hiccup in that is going to send these stocks into correction. And we're not talking a 5% correction. When the NASDAQ pulls back, it can drop 20, 30% in a heartbeat. We saw that in 22 when the NASDAQ was down about 34%. People forget. You saw that this summer, going into summer, when the NASDAQ was down over 20%. So what we're saying is any rate of growth, any change in that. But I would tell you a thing that really concerns us. OpenAI is a great company. We love it. We have investments in tech, the Googles, the Broadcoms, we have it. But there's a lot of circular financing taking place. All these companies are giving money to OpenAI, which turns around and counts the revenue back that they're going to get from these other companies. And, you know, OpenAI, you know, is valued so highly, and it's not really generating as much revenue as people think. So if there's any hiccup in OpenAI's financing, that could cause a domino effect. We don't think it will, but we're just saying there's systemic risks out there that people are ignoring. And if there's a hiccup in financing in AI, Katie, bar the doors, because these stocks will drop like a heartbeat. So we're just saying identify risk, and for the individual investor, have exposure. But this is a good time to pare it back.
Right. Max, thank you so much. Good to see you.
Thank you so much. Have a great day.
Coming up on Yahoo Finance's opening bid with our executive editor, Brian Sozzi. There he is. What a nice blue you have on today, Brian Sozzi. What's coming up on the show?
Julie, you're just saying that because I complimented your egg bites. I had 5 more of them this morning, actually 4. They were so good. Thanks for leaving them for me. Nonetheless, I'm all in on potentially overvalued tech stocks. Of course, we're talking Palantir, but we got Rigetti Computing CEO. That stock is up 150% this year, despite them warning in their 10K they may not make revenue for the next 4 or 5 years, if at all. So, fun chat coming up, Julie.
I'm looking forward to it. Thanks so much, Oz.
Thank you.
That does it for Morning Brief. Opening bid is coming up.